Hey everyone, and welcome. So, you think buying a home means you have to follow the standard government program playbook, right? Well, get ready, because we're about to change that. Today, we're unlocking a hidden world of home buying assistance, a powerful set of tools offered directly by banks that can make owning a home a reality, probably much sooner than you think.
Okay, let's just jump right in with the big one. Is that 20% down payment a myth? For so many of us, it's the most intimidating, most impossible feeling barrier to ever owning a home. But what if I told you there's a whole ecosystem of programs out there designed to help you leap right over that hurdle? Stick with me because we are going to dismantle that myth piece by piece. So here's the key thing to understand. Beyond all the government aid you hear about, there's what I like to call a secret menu of home buying tools. And these aren't coming from the government. They're proprietary programs created by the banks themselves. You can think of it like a secret toolbox, filled with grants, special loans, and discounts that most people just don't even know exist.
So, to wrap our heads around all this, here's our game plan. First, we'll look beyond government programs to understand why banks even do this. Then we'll dig into the really good stuff: cash for closing costs, mortgages that don't have PMI, and special loans just for your profession. And then we'll pull it all together so you have a real home buying strategy. All right, so let's start with that really basic question. We're talking about banks, right? In a world driven by profits, why on earth would they create programs to give away money or offer better deals? Well, it's not just out of the goodness of their hearts. There's actually a really powerful incentive behind it all. And that incentive is this little thing called the Community Reinvestment Act, or CRA. This is a federal law, and it basically says that banks have to meet the credit needs of the local communities they're in, especially in low to moderate income areas. So by creating these special grants and loans, banks are actually fulfilling their CRA obligations. It's a win for them, and honestly, a huge potential win for you. Okay, now we're getting to the fun part: free money. The very first tool in our toolbox is direct cash assistance. We're talking grants and credits that banks just give you to help slash those huge upfront costs for your down payment and closing fees. And believe me, these numbers can get pretty serious.
Let's kick things off with a big one: Chase. Through their Path Forward commitment, they offer what's called a homebuyer grant, and it's $5,000 for properties in over 6,700 designated minority communities all across the country. And that's a straight-up grant to help with their costs.
And of course, Bank of America is in on this too. Their down payment grant program can give you up to 3% of the home's purchase price, and it's capped at a whopping $10,000 in certain markets. And let me say it again, this is a grant, not a loan. You don't pay it back. But the numbers, they just keep getting bigger. Lots of local and regional banks take part in the Federal Home Loan Bank of New York's Homebuyer Dream program. And this isn't some small credit. We are talking about a grant that can go up to $30,000 for first-time homebuyers who qualify. But believe it or not, it can get even more powerful than that. For first-generation homebuyers or for people buying in certain minority census tracts, the Federal Home Loan Bank system lets some of these programs be layered on top of each other. That means you could potentially combine grants for a total of up to $60,000. That is a complete game changer. So let's just break this down real quick. You can see how the Federal Home Loan Bank system is designed to target different needs, right? You've got the standard program for lower-income buyers, a plus version for middle-income folks, and then that powerful wealth builder, which is really focused on closing the generational wealth gap. The secret here is finding a local bank that participates and can get you access. Okay, so we've covered how to slash your upfront costs. Now let's grab the next tool from our toolbox. And this one is all about lowering your monthly payment month after month. This tool tackles one of the most annoying extra costs in home buying: private mortgage insurance.
So what the heck is PMI anyway? Well, it's an insurance policy you're forced to pay if you put down less than 20%. But here's the kicker: it doesn't protect you, it protects the lender. And it can easily tack on hundreds of dollars to your monthly payment, money that doesn't build a single cent of equity for you. It's just a major drag.
But this is where these proprietary loans are just brilliant. Look at this comparison. A normal conventional loan with 3% down, you're paying that expensive PMI. But a bank's own portfolio product, like the Citi Home Run Mortgage, also lets you put 3% down, but, and this is the key, with no PMI required. That means you're saving serious money every single month, right from day one. And it's not just Citi. This is a really popular tool in the private sector toolbox. KeyBank has a no PMI mortgage with as little as 0% down. You've got Valley National and M&T Bank with similar programs. The takeaway here is if you're looking at a low down payment loan, you absolutely have to ask your lenders about their proprietary no PMI options. Now for our third category of tools, and this is where things get really interesting and really specialized. Some of the most flexible and powerful programs out there aren't even open to everybody. They are tailored specifically for people in certain professions. The classic example of this is the doctor loan. Banks like Citizens know that doctors and other medical professionals often have a ton of student loan debt, but they also have a really high future earning potential. So they created their own special loan programs that basically look past the debt and offer incredible terms just to win their business for the long haul. And just look at how aggressive these programs are. Flagstar Bank offers 100% financing, that's zero down, on loans up to $1 million and no PMI. Citizens Bank will completely ignore your deferred student loan debt when they calculate your debt-to-income ratio. I mean, these are features you will just not find in a standard mortgage. But hey, it's not only for doctors. A lot of community banks and credit unions have taken this idea and run with it, creating what they call heroes programs. And these are designed to thank and attract other essential workers. You know, people like teachers, firefighters, police officers, and nurses, with their own special set of perks. And these perks are awesome. Teachers Federal Credit Union has a zero down payment option. Island Federal offers 100% financing for heroes, and they waive all of their underwriting fees. Broadview literally gives you cash back and a credit for your lawyer. The lesson here? It always pays to mention your profession when you're talking to a lender. Okay, so we've seen the tools, cash grants, no PMI loans, and these cool professional programs. Now for the most important part. How do you actually put all of this information to use? Let's build a clear, actionable strategy right now. All right, here's a pro tip that so many people miss. Relationship pricing. A one-time grant is amazing, don't get me wrong, but a lower interest rate can save you so much more money over 30 years. Banks like KeyBank, for instance, will literally shave 0.25% off your interest rate just for having a checking account with them and setting up autopay. That little 0.25% can add up to tens of thousands of dollars in savings. So here it is, your action plan. First, you have to use the magic words. Ask every lender you talk to about their proprietary or portfolio programs. Second, always ask about relationship pricing for rate discounts. Third, don't forget to mention your profession. Fourth, try to work with local lending specialists. They're often the experts on these programs. And one last really important note, remember that grant money can sometimes be considered taxable income, so just make sure you plan for that. You know, we started this by questioning the whole myth of the 20% down payment. Now that we've gone through this entire secret toolbox, the grants, the no PMI loans, the professional perks, the real question is for you. With all these tools in hand, is that dream of owning a home actually much, much closer than you thought?